Equity markets hitting record highs recently is confirmation that we remain in a strong bull market, and she's raising her year-end target for the S&P 500. For more, I want to bring in Ann Bartels, Chief Investment Strategist at Sanctuary Wealth. It's nice that you're so optimistic. We're going to talk a little bit later about some of the comments that Jamie Dimon made yesterday, which I thought were, I think he might be optimistic, but, worried deeply, I think, about a possible recession.
But bullish on AI.
That too. Where do you and Jamie agree or disagree, I guess, is the big question this morning.
Well, we agree on AI. I think it's really going to continue to transform global economies, and we're really seeing that get priced into the equity markets and on a global scale. This is not just a bull run in the United States. We're seeing some of the European markets hit record all-time highs. You're seeing Japan reach all-time highs since 1989, 1990. That market could be moving into a whole new secular bull market. So, and a lot of people have been saying that this rally is narrow, that it's only like the Magnificent Seven. We used to talk about FANG, but it really is a lot more. We're getting new highs in many different pockets of the market. And a barometer that you don't hear a lot of people talk about is the S&P advanced decline line. And that is confirming the breakout in the S&P 500.
So if you could own anything right now, are you in the Magnificent Seven category? Are you in the Fancy Four, Fantastic Four? I don't know. Some people have now moved it up to five again. Where are you?
We have been bullish on the Magnificent Seven. I think if you're managing a portfolio, there's a lot of risk of not owning some of these names. They're leaders in the AI space. And what I also point out, Andrew, to clients is most of the companies, at least right now, that are really developing AI are coming from the United States. We are the leaders. So not only are U.S. investors wanting to own these companies, but they want to be owned by international investors as well. So we've been very bullish on technology. And what we've encouraged clients to understand is that our economy moved from an industrial base to a digital base. We use 2000 because it's a nice round number, but that really happened in the 1990s. And we're hearing a lot of references to 1995. And I would agree with that from a technical perspective. The market made a significant move from 1995 to 2000. And a lot of that came from the productivity enhancements from computers and from telecom, what we used to call TMT. And I think AI is now just starting to have that type of influence on our markets. And we're getting huge base breakouts. In technical parlance, they're called saucer breakouts from a saucer pattern or from what's called a cup and handle. And we're not just seeing this from equities. Bitcoin just broke out of a cup and handle. Where are you getting
these phrases? Where are you getting this from, cup and handle?
Okay, so this is technical analysis. These are different patterns that have been given these particular names. And, my aunt, who was a very famous technician, Bernadette Bartels Murphy, used to tell me, Marianne, if you see a smile, that's a bottom. If you see a frown, that's a top. Well, we got a lot of smiles going on in this market. And so the smile is called a saucer bottom. And then there's something that's called a cup and handle. It has a saucer, but it kind of trades sideways and then breaks out. It kind of has a handle. And we're seeing this across the market. And these are over large trading periods, in some cases a year, which means there's significant upside potential for this market. So we raised our target for the market. In November, we had for the S&P 5,200 to 5,400. We do a range. And we just raised our range to 5,400 to 5,800.
There is a view, as you know, and we talked about it yesterday in the broadcast, that once you get into sort of the summer and the fall, you're going to get into this presidential election. And both the volatility and historically, when you've looked at how markets have traded, it becomes a lot more complicated. How does that factor into your thinking?
Well, if you look at the presidential cycle and you look at when an incumbent is running, basically the markets are up. And then when I look at all the fiscal spending that's coming into this market, I think it's already baked in for the presidential election. I do think people can get emotional, but I don't think it's going to change the fundamentals.
You know what the result is? What's the result?
No, I don't have the results, but The result is I still think equities are going to trade very well and we'll still have a significant year-end rally.